So following off my previous update, I mentioned how we were tracking this correction made up of a double XY structure, and that Y wave ended up tapping into its range between 26 cents to 26.67 cents. And since then, we have seen this reversal to the upside where we then tapped into this range that I set out between 28 cents to 30 cents. And I mentioned how this range will be key in determining if whether or not we are bullish or bearish. And so if we were to get rejected within this range, that would then further confirm that what we are forming is a deeper correction made up of a bigger three-wave move, like so, where the Y wave has the potential to breach below the local bottom, which as it stands sits at around 26 cents. However, if we were to exceed that range, whilst at the same time breach above the local top at around 31.37 cents, that will then further confirm that we are bullish. And what we can see forming is a bigger three-wave move to the upside, like so, where again the Y wave has the potential to breach above the wave W. And this WXY structure would then form part of a bigger Y wave. And so, yeah, we still need further confirmation as it stands right now. We have seen this move to the downside where we find ourselves finding support at all three EMA levels, which is the 50, 20, and 200 EMA. And so what we need right now is for the bulls to continue to regain control of the market and drive the price of it up towards high highs. It's possible that this move here could also be impulsive, where what we can see forming is a five-way structure. And this move here would then form the wave one. This would be the wave 2, 3, 4, and 5. So if I drop down to the 15-minute chart, maybe it would be more clearer. So we can see wave 1, 2, 3, 4, and 5 play out like so. So for this five-way structure to be valid, two things need to happen, where the third wave will need to reach the 1.6 level as a minimum requirement, and the wave 4 cannot cross the wave 1, and the wave 1 sits at 27.18 cents. And so as you can see right now, the wave 4 doesn't cross that level. And so it's possible that this five-way structure is in play. And so if I was to bring in the fib tool and check to see if the wave 3 has met the minimum requirement, so 26.53 cents. And so here you can set the 1.6 minute level. This is at 28.61 cents, which we ended up exceeding. And so, yes, very much possible that what we can see forming right now is a five-wave move. And so assuming that we ended up bottoming out the wave 4 at 27.48 cents, the wave 5 at the minimum will have to reach the wave 3. And that level as it stands sits at 29.22 cents. But typically the wave 5 reaches anywhere between 1.236 to 1.618 of the wave 4. So if I bring in the fib tool once again, you can see that the wave 5 has the potential to reach anywhere between 29.65 cents to 30.35 cents. And so this would be the best case scenario. And if I go back to the hourly chart, it will be interesting to see if this Y wave is actually in play. And if it just so happens that the Y wave is in play, and this five-way structure could form the wave W, and we could see a correction followed by another push to the upside to then form the Y wave, which will then complete this move here. And so, yeah, assuming that we ended up bottoming out at around 26 cents, what I'll do is I'll set out the Y wave target. So if I just remove some of this and bring in the fib tool from the 1.36 cents. So yeah, here you can see that the Y wave has the potential to reach anywhere between 32.14 cents to 33.79 cents. And we also have a sell order within this range. So it will be interesting to see if we can break above this sell order and continue to make a move to the upside or then tap into this range here. On top of that, you can also see that the bulls actually have the momentum on the stochastic RSI. And so I will be looking out for a continuation to the upside on the price of ADA. If I go on the 4-hour chart, here it looks like the bulls are slowly starting to lose the momentum. It will be interesting to see if we don't manage to break above the 200 DMA, which as it stands is acting as a level of resistance. And so if it just happens that we continue to get rejected at the 200 DMA, that will then confirm that we are bearish, and we could see a double XY structure form to the downside instead. And if I go on 8-hour chart, so the bulls still have the potential to continue to regain control of the market. And you can see that we are finding support at the 50 EMA and the 20 EMA. And on the daily chart, the bears are slowly starting to regain control of the market. And so, yeah, it's kind of up in the air as it stands. And so key region to be keeping an eye on once again will be this one here. And if we were to get rejected, that would then confirm that we are bearish. However, if we were to exceed this range, that would then confirm